Hello everyone, here's an update on my short. Drum roll please. Let's go back to my last YouTube video. In this video, I said that I would be here's my thought process. I said, look, Friday if Friday we end up making highs and then Monday we make even higher than Friday, on Monday I am going short. That's exactly what we did. Let's see how that short is playing out. All right, so this is a daily chart of the S&P futures, ES, Friday, October 11th. Yeah, I don't know why I thought it was Friday the 13th. Anyway, Friday, October 11th, we made a new high. I said if we make a new high on Friday, I want to start leaning bearish. But then on Monday, if we make another high, I'm going short. So I did not go short on Friday. I entered into SPY puts and QQQ puts on Monday. And currently, the NASDAQ is the leading loser to the downside. So what we see is sector rotation. Sector rotation essentially means that money is coming out of tech stocks, which is the reason why the NASDAQ is falling so low. So money is flowing out of tech stocks and it's going into the Russell. The Russell 2000 was, as I was explaining before, was the loser. It was creating a bull flag, and now we're currently breaking out, and essentially money was flowing out of tech coming into the Russell, which is affecting the bullishness. The NASDAQ's bearishness is affecting how bullish the S&P is going to be. So I'm currently, we solidified some profits on the NASDAQ. I'm still holding on to runners, and I'm still holding on to the S&P short. And I'm still also holding on to, I don't really want to say right now because, it's a YouTube video. But for the members, there's also other things that we're still holding, obviously. So moving forward, though, what are the next steps? If this chart was the only thing that we were looking at, it's impossible to trade. It's impossible to make an assertion of where the market's going to go. So, of course, we have to look at all of the different factors. Let's first start off by looking at the dollar, the bonds, and the VIX. All right, first and foremost, the dollar is important to look at because it has an inverse relationship to the market. If the dollar is rising, then that means that the overall market should be falling. Currently, the dollar is rising, which is supposed to show weakness in the overall market. Clearly, it's not doing that. Next, let's take a look at the 30-year bonds. So we know that the bonds have have a correlated relationship to the market. If the bonds are bullish, the overall market should also be bullish. So we were looking at this 120.18 level on the 30-year bonds. It was acting as a level of support from prior tests, and now we can clearly see that it acted as support, and we broke back above. Spectacular. This is definitely, we reclaimed a major level of support. We have this MACD indicator starting to curl upwards as well. So things are starting to look bullish on the bonds as long as they can break above 122.15. If we can break above this level of resistance here, essentially, then that would be very bullish for the overall market. Maybe. Because if the bonds break above major levels of support and resistance, that strength translates into the overall market sometimes. So we're going to have to see if that plays out. And then last but not least, let's take a look at the VIX. So the VIX is similar to the dollar. It has an inverse relationship to the market. And if the VIX is going up, then the dollar should be falling. One thing that I will say is that the VIX is still holding this 1850 area. If we're above that level, that means that the VIX has more room to go to the upside. And if the VIX has more room to go to the upside, that means that the market basically looks bearish. So the VIX and the dollar are both sort of signal. The VIX, obviously, we had a red day today, but it's holding above support. And we're not breaking below support. If the VIX broke below support, if we broke below support on the VIX, then that means the market should break above resistance. Does that make sense? So the VIX still holding support. The dollar skyrocketing upwards, but it's not really translating into the overall market just yet. All right, so there's a few interesting charts that I want to show you guys. We're going to take a look at the large tech stocks as another indicator of where the market overall should go. Okay, so I'm going to give you guys my thought process. So number one, this is a chart of AMD, and AMD is retesting this major trend line from back in March. So now, obviously we had, multiple touches, and now we're coming back and retesting it. So if this level can hold and bounce, then, that might be bullish on NVIDIA as well and everything. But currently, this is not a really clean, this is not like a setup where I would really want to go long, in my opinion. Like, I would rather wait for it to bounce. All in all, this is a pretty bearish setup. I don't really look, it doesn't really look too bullish, but we could bounce back up to 163, and then at 163, the market is going to have to make a decision. But currently, I would not want to go long here, and I would rather see how the market plays out. 163.50. Let's take a look at NVIDIA. So NVIDIA had a, what the hell? I was like, what? So NVIDIA also had a big weekday recently, the same way that AMD did, but we had a bit of a bounce, bit of a retest. But now AMD, where AMD needed to go to 163.50, NVIDIA already tested that essentially earlier. So we tested where we tested at basically NVIDIA 136.70. So if NVIDIA crosses and closes above that level, then it can continue pumping up. And if NVIDIA continues pumping up and closes above that level, then AMD is most likely going to continue pumping up and all that other good stuff. So that's currently what's going on with semis, NVIDIA and AMD. We have to look at these because these are the main reason why AI-related companies are the main reason why the market is even bullish. So that's number one. So for AMD and NVIDIA. Apple is also showing an interesting little situation as well. So Apple, similar to AMD, we had multiple touches back from July's trend line. So back here, here, and here. And now we are coming back to retest it. So once again, this is not the best. I would not want to go long here. I just would not want to go long here. The MACD indicator is overbought and it's pointed lower. Yes, we could have like a grind upwards, but a grind upwards, hoping for a grind upwards is not a good trading strategy. So what I mean by a grind upwards is we could halt at this level of support, this trend line here, and then grind upwards, hoping that buyers can step in at this level of support. But if buyers begin to fatigue, then this is going to fall. So I would rather not try to, go long into hoping that a grind upwards happens. Okay, so that's for Apple. Very, very interesting. I also want to show you guys Netflix. Netflix was a major winner this entire time as well. I'm also going to show you another chart after this. But Netflix, major winner this entire time. Starting to show some weakness. The MACD indicator to the downside is starting to get very weak. So when it gets weak like this, the overall momentum of the slow MACD indicator also gets pulled down. And then the momentum overall gets pulled down. So I think a lot of these setups are setting up for bearish moves. But the problem with Netflix is that we're at a level of support. So we can't, it's not a high quality short to go short here. Once again, what we're going to basically be looking at is retests of levels of resistance. And if those levels of resistance can hold, that would be an amazing opportunity for a short and for a continued move to the downside. So Netflix's level is essentially this 715, 720 zone. Netflix is very not as precise, but 715 to 720 on Netflix. And then Meta is another really, really big one. So Meta has been killing it. But we have closed below a major level of support that was built from a fib extension level. And I made this fib extension level like 2 years ago. So this level of support is still holding, and it held phenomenally. So we were holding this level of support here at 583, and we just started to break below. So what we're seeing is NVIDIA, AMD, Netflix, and Meta starting to show some cracks in the armor. You can see that the MACD indicator is like it's in free fall almost. And when this gets into free fall, the momentum starts to fall lower as well. But yeah, so that's that. Tesla is also showing a lot of weakness. Clear cut weakness. It's not bouncing anything. What's even worse with Tesla right now, it's holding this level of support. Great. But we're getting a bullish crossover on the MACD. So when we get a bullish crossover on the MACD like this, where it's starting to curl upwards here, and the price is not moving, then that's really bearish. Generally, it's really bearish because say in the next 2 days, we get a crossover on the MACD. And if Tesla is still here, that is not good. This is a grind upwards sort of trade. Once again, it's not something that I want to get into. So Tesla, it's not risk reward wise. You have a tight long opportunity on Tesla, 100%. But this is not something that I would want to go long on for Tesla. We looked at NVIDIA. Let's take a look at Google and Microsoft. Google's doing pretty well, similar to NVIDIA. It's an AI related company. It not much to talk about. Google, Microsoft was a big bouncer recently, but it was the biggest loser. So we also saw a few, basically last week, that Microsoft was the biggest loser. It started to close outside of the lower level of the Bollinger Band, and we're basically back at this level. So Microsoft's not doing too hot. Google's not doing too great. Let's take a look at Amazon. Amazon, similar situation. This is basically where the market overall just needs to make a decision. We're at major levels of resistance, 189, 190 on Amazon. Are we going to break above and start making new highs, or is this going to be a good short opportunity? All in all, as we saw the large tech stocks, pragmatically speaking, these are not the best long opportunities. And can't really do much about that. And so now looking back at the futures, the ES, the NASDAQ, what are we supposed to do? Are we supposed to go long here? Definitely not. I would not want to go long here. This is we're at all-time highs, basically. Going long into all-time highs does not make any sense. Do we go short here? Well, I already got short Monday, but regardless, there is still more room to the upside potentially. So I'm not going to claim to be perfect with everything. I'm not going to claim that this is the best opportunity. Everyone has to go short. But I'm just being transparent and sharing that I am currently short on the market. And I believe even if the market ends up making, what is it? If we hit 59.50, 59.20, that might be a problem. But overall, these being bearish up here makes sense. And that's essentially what I'm looking at. More specifically is because the NASDAQ is showing way more weakness than the S&P. So we just saw the tech stocks. They're showing way more weakness than the S&P 500. And when the tech stocks show weakness, that is what drives the market. So we had a flat day on the NASDAQ, right? We had a 1.6% green day on the Russell. And what ended up happening on the ES? We're only up 0.4%, barely moved. It's because the Russell does not hold as much weight in moving the market the way that the NASDAQ does. And that's why I saw that there was potential for the NASDAQ to fall. So we went short on the NASDAQ as well as the ES. And currently it's working out. So that's my thought process. It's going to be interesting to see if this moves to the downside occurs before earnings week. Earnings week is going to end up occurring basically at the end of October. All of the large tech stocks, trillion-dollar companies are going to be reporting earnings. most likely we are going to get an earnings run up. Okay, so we have about next week essentially. Let's see if the market can fall into next week. Excuse me. So if it falls into the end of the week and then early next week prior to earnings, that would give a good opportunity for the dip buyers to come in and push the price of the stocks that are going to have earnings. And it's the perfect opportunity. It's the perfect storm. Makes the most sense. There should be a bit of sell-off. The market needs a break, in my opinion. And this would be the best opportunity. We have like a lot of weakness in the tech stocks already. If the S&P wants to make new highs because the Russell is in new highs, that's completely fine. It's irrelevant. All eyes are on the NASDAQ and the large tech stocks. So there's no reason to get too amped up and worried about, where the market is going to go. Pragmatically speaking, the tech stocks are showing a lot of weakness. The VIX is still showing support. The dollar is showing skyrocketing strength. The bonds are showing weakness. And there's really not much else to look at. So one day at a time, that was my thought process. And so far, so good. So let's see how the next few days play out. So until next time, I hope you guys have a good rest of your day. I'm glad that I here to update you guys on how things went. But that's what's going on. All right. So I hope you guys have a good rest of your day. Love you guys. Take care. Have a good one.